Welcome back, everyone, to another episode of Living Your Greatness. This is your host, Ben Mumme. And today we have a new guest to the show, and his name is Andy Schectman. So for those of you that don't know Andy, he's a respected name in the financial services sector with over 25 years of experience. He is the president and the owner of Miles Franklin Precious Metals. Before starting the company in 1989, Andy became a licensed financial planner specializing in Swiss franc investments. Miles Franklin has made over $5 billion in sales, and Andy has developed an operation that maintains trust, collaboration, ethical behavior, superior customer service, and satisfaction to serve its clients better. So Andy, without further ado, super fired up to have you on today, brother.
Yeah, man, it's great to be here, Ben. I appreciate the invite and your kind remarks here at the opening, and I guess it's a little bit overdue, and I appreciate your flexibility in adjusting to my crazy schedule. So nonetheless, long overdue, but glad to be here, and I really appreciate you having me.
Totally, Andy. Well, great to have you on. And yeah, it's been a pleasure to meet you a couple of times in the last couple of years there at the J. Martin's conference there in Vancouver. And, just to give some context here, some listeners might be tuning in and, haven't heard of you before. So let's start off with a little warm, easy question here. Tell us a little bit about yourself. Where did you spend your formative years growing up? And what inspired you to become a successful entrepreneur, precious metals expert, and world-class speaker on economics, global investing, and foreign currencies?
I appreciate that. Well, I live now in Delray Beach, Florida. I moved here 2 years ago. We've had a satellite office here in Delray Beach for 12 years that my oldest friend in the world runs. And I thought I'd spend my entire life in Minnesota. I didn't think I'd ever leave. My wife would often say, why don't we can do your job from anywhere? And I never believed her. I would go to the office every day. And well, since the pandemic, I haven't been to my office in Minneapolis more than once or twice. I realized that she was right all along. But Minneapolis turned into a place that I didn't recognize anymore when George Floyd tragedy happened, when Minneapolis led the nation in the defund the police movement, and law and order became something that began to be eroded in the state of Minnesota. I am happy to report that it appears as though life has returned a little bit more on the normal side, but I decided to pull up tent and move to Delray Beach, Florida. I left my corporate office in Minneapolis, however, and we have been there for 33 years, starting in 1990 with my dad. And when we started the company, Minnesota is the only state in America that requires licensing and bonding and background checks in what is a federally non-regulated industry. It's the only state in America that does. So consequently, we are held to a much higher standard. And we embrace that. Ben, we embrace the accreditation that it gives us and the peace of mind that it would give our clients, that not only do I believe we have the best reputation in the industry, we've never had a customer complaint in 33 years and over $9 billion in sales, but the state of Minnesota licensing puts an exclamation point on that. Most of the industry has boycotted the state of Minnesota because of this, because it would be the only state, if they deliver into, where they would have to have a background check of everyone in the company annually, post a surety bond, the only state that require it, and continuing education and compliance that is really onerous if you're in any other state other than Minnesota. Even if you are, it's onerous, but it does hold us to a much higher standard. And so that's kind of the history of it, but before I leave this topic, I was 19 when my dad said, let's do this together, and 20 when I actually came on board, and he said to me, look, and we started from scratch in a one-room office the size of a closet. My dad's middle name is Miles, and his buddy who lent us $60,000 along with my parents selling their life insurance policies, his middle name was Franklin. And he said, there's going to be one rule and only one rule, because I'm not going to let you make the same mistakes that I did. And that is, you'll buy something, gold or silver, every 2 weeks. And that's it. And I said, well, if that's the only rule, that's That's easy to live by. Let's do it. I've been the owner of the company pretty much outright for 2 decades. My dad's still around, and he's my partner in crime in many respects. And we talk a lot, but it's my business to run, and I have honored my commitment to my father, and I have purchased gold and silver every 2 weeks for 33 years without fail. I have never missed ever a 2 week period. And so to understand the way that I look at metals, I think it's relevant before we go into any questions that you have. And that is, I look at it as wealth. To me, it's not an investment. It's wealth I hope I never need to use. And if I do, I'm damn glad I have it. And if not, I know that the legacy that I will leave from my children will be one of that, even in the year 3000, when my great grandchildren are, using the gold that I passed on to my kids, it will be wealth long after the bills in our wallet are hanging from a frame in the Smithsonian as an example of what was. So when I think of gold and silver, I think of assets that carry no counterparty risk, are not simultaneously someone else's liability, but at the same time are assets that have outlived 2 world wars and German hyperinflation, the Great Depression, every pandemic, everything the world has ever thrown at it. And it is still immutable wealth, so much so that the most sophisticated and well-informed investors on the planet, the central banks, over the last 15 months have bought more gold than they ever have in history. The more things change, the more they stay the same. And I think whether it be my own personal way of looking at it or the central banks, the most in tune, wealthy, sophisticated players on the planet, I think they view it the same way. So as we continue down this discussion route, just understand that anything that we talk about, it is rooted in the fact that, to me, gold is not an investment. Gold is wealth. And you own enough of it, you'll be wealthy, but you don't buy it as an investment with intentions of getting wealthy. I think that's the wrong way to look at it. And at least that's the way that I do. And from there, everything else will just evolve in terms of where this discussion goes.
I appreciate that explanation there, just giving your story and giving your background of how you became the person you are today. And more importantly, also, giving some snippets or compelling reasons of, why to invest in, precious metals, specifically gold, for wealth preservation. And it makes me think, Ashley, on that kind of base is, a lot of millennial investors, who are from my generation, right, are more short-term thinkers, and they sometimes forget the importance of value-based investments, right? So a question I have for you is, like, how can investors avoid, the temptation of chasing trends in the market and instead focus on long-term, value-based investments like gold and silver?
To do your homework. And, I think part of chasing things is FOMO. It's the feeling of, geez, I know every bit as much as that guy does, and he made a killing. He must, I got to jump on this too. Trends are usually established long before they become evident. Case in point, the most sophisticated investors on the planet, the central banks and the sovereign wealth funds and the commercial banks, are draining the exchanges, COMEX, the LBMA, the ETFs, Shanghai Metals Exchange. They're experiencing record deliveries. In the case of the ETFs, it's only the authorized participants that can pull metal out. And they're using the suppression of the Western paper markets to run cover. But when you see the central banks over 15 months buy more gold than they ever have in history, and really you go back to 2017, and we see a trend of central bank acquisition using the suppression of the Western paper market to run cover for what amounts to massive acquisitions, draining the exchanges to the extent that not just in precious metals, the London Metals Association, London Bullion Market Association, the LBMA, saw more metal delivered off its exchange last year than ever before. We saw 90% of its zinc delivered, 75% of its aluminum delivered, and so much of its silver delivered that they put out a memo at the beginning of 2023 saying if deliveries remain the way they were in 2022, by the end of the year, there'll be virtually nothing left for us to deliver. And so when you talk about massive deliveries off of COMEX or the LBMA or backdooring the ETFs. These are very sophisticated traders doing that. I promise you, Ben, it would be much easier for you to write me a check for $50 million and have me source you very promptly gold and silver bars and coins versus having to try and take delivery of 100-ounce good delivery gold bars from COMEX or 400-ounce good delivery gold bars from the LBMA, or contracts in silver are 1,000-ounce silver bars. Where are you putting it? Where is it going? Who's taking delivery of it? You have to be very sophisticated. But that is what is happening. In other words, the big money is positioning quietly ahead of the curve using the suppression of the metals markets, which are well documented. And it's tremendously frustrating to see a handful of large commercial banks suppress the paper price of gold. Just to give you an example, a week ago Friday, I haven't looked since, but a week ago Friday on COMEX, there were 95,000 September contracts still open in silver on COMEX, 95,000. Which represented 474 million ounces of silver. The thing about it is there's only 30,000 ounces, 30 million ounces of silver in roughly 30 million ounces in the registered category on COMEX. Those are the bars that are available to be delivered based upon the contract. So explain to me how the hell you can have 30 million ounces backing 474 million ounces in paper claims if they stood for delivery. That's called rehypothecation, and it allows the exchanges to control the price based upon the derivative of it rather than the way that the exchanges were originally designed, where the commodity itself would dictate the price, not the futures market, and the ability to, with tremendous leverage, over 30 times leverage, to control the paper price. And big pocketbooks like the commercial banks, they know where everyone's positioned, where their pain points are. They can suppress the price by shorting it, dropping lots of contracts onto the market, and get everyone to sell, or they can go the other way. The point of it is that it's a casino, and because they have used this to their advantage, you are seeing the markets being drained by the most sophisticated investors on the planet. By the time the public wakes up and sees it's a trend, whenever that trend in motion really takes hold for whatever reason, well, the insiders will have been in for several years, base building and creating their value play. So I guess the bottom line is that if you want to be the person who succeeds in investing and isn't always chasing, then you have to spend enough time to research and understand the fundamentals, the big picture, rather than just the price action. Because I would argue price is the greatest tool of misdirection that there is. And you want to misdirect the markets, you do so with price, which blurs the fundamentals that are so very important. So to me, fundamentals are more important than price, but you have to really believe that the research that you have done and the fundamentals that you see in the end will play out the way that you think, rather than looking at a price, which is very counterintuitive to world events right now. So whether we're talking precious metals or any other investment, do your homework and don't just chase price or listen to your buddy who tells you this is the place to go. And because of that, you do it. You only have yourself to blame in that respect.
Absolutely. I think that's super valuable advice, yet so simple, which is, do your homework, do your due diligence, actually understand what you're investing. And, you brought up a lot of really good points, about what's going on right now when you think of the big picture of, gold and silver. And it's clear to me that, your conviction is very strong and that you've done your homework. But a question I have for you is, there's some other things playing out, and I want to touch on the idea of a gold-backed currency within the BRICS group, which has been circulating a lot lately. So a question I have for you is, can you share your insights on this concept and its potential implications for the global financial landscape?
Yeah, well, I mean, whether we're talking the BRICS or the West, I think ultimately gold will have a role in pegging to a new system. We'll start with the West before I get to your question on the BRICS. Well, first, if we go back to 2019, remember I said the banks were buying gold in 2017 and 2018. They also did a lot of repatriating of their gold. The German Bundesbank, the Bank of Austria, Hungary, Turkey, Poland, the Dutch National Bank, the Czech National Bank. All of these banks not only went on a buying spree starting in 2017, but all of them repatriated their gold from the New York Fed and the Bank of England out of nowhere. In 2018, those same banks bought more gold as a group than they did in the 60 years previously combined. And 2019, those numbers doubled. And then the Bank of International Settlements reclassified gold as the world's only other tier one reserve asset. So since the end of World War II, US dollars and treasuries have been tier one. That's it. The BIS, which is the central banker's central bank, the most powerful bank in the world, who not only told us that by 2025, every country needs an operational CBDC, but they also in 2019 reclassified gold to a tier one level, which is extremely relevant when you realize the lengths that the central banks have gone to suppress the price and accumulate the physical. And so as we move forward and we see the BRICS, we'll get to that in a moment. I'm going to jump forward to the IMF, and then I'll go back to the BRICS. The IMF, the head of the IMF, Kristalina Georgieva, the International Monetary Fund, another roughly 150 countries, came out and said central bank digital currencies that are not pegged to something, not backed by something, are just fiat. Well, about 6 months before that, the IMF, who has never been overly gold friendly, came out with a report that was entitled "Gold as an International Reserve, comma, a barbarous relic no more?" question mark. So you have the IMF acknowledging gold's role as a monetary asset and not a barbarous relic. You have the head of the IMF saying CBDCs need to be pegged to something. What would that something be? Doesn't it make sense to use the only other tier one reserve asset? If we go back to your initial question, the other side of the pond, you're looking at the BRICS, Brazil, Russia, India, China, South Africa. They have a meeting in Johannesburg next Tuesday. The list of countries that have expressed interest in joining amounts to over 41, maybe even more. Saudi Arabia, the linchpin to the dollar hegemony, is thought to be admitted as a full member here at the meeting. There are a lot of things that are happening, but if we look at what the Russian finance minister said on multiple occasions, that this currency would be backed or pegged by a basket of commodities using gold as well, and distributed ledger technology showing the veracity of it. And I believe that will be the case. And whether or not they whittle it down to just gold, or they do use a basket of commodities, things like oil, Saudi Arabia and Russia being two of the three largest oil producers in the world, or gold or platinum or whatever that basket is, I believe it will be. The only way that you can get people to trust a system that has been so badly mismanaged through inflation and weaponizing of the dollar and all of the things that have gone along with this currency that I think have soured people's view on it, is to peg it to something legitimate so that politicians can't do what they've always done, and that is to choose inflation over austerity or the tough decisions. So I do believe you want to give it legitimacy, you peg it to gold. Now the question is, how much do you peg to gold, and how do you show the veracity? Well, the veracity part would be the digital yuan. I believe the 4 or 5 year beta test that they've done, north of 40 billion in settlements, could easily be the rails by which the new BRICS currency is pledged to, showing what each country, using that blockchain technology to show what every country has pledged to the system. If you do it with transparency, you allow it to be audited third party independently, and you show what every country is pegging to the new system, you do not need to make it redeemable. In other words, I believe Charles de Gaulle from France, who drained all of the gold, most of it from the US Fed, and that's why Nixon closed the gold window, or the US Treasury. That's why he closed the gold window in 71, just a day or two ago. It was the 50, almost 50, what would we say? Yeah, it would be the, the anniversary of it in 1971. So what do we got? 55-year anniversary, is that right? What do we got? 71 would be, yeah, it would be 52-year anniversary just the other day. And because he proved that convertible currencies convert. So I think instead you use distributed ledger technology to show the veracity of what every country has pledged. And that's the only way that it will gain credibility. I think the problem with the dollar is a lack of trust, and we have eroded the trust. We have mismanaged it terribly. And by weaponizing the dollar against Russia, taking their Forex reserves, not just sanctioning, but actually confiscating and using it to rebuild the Ukraine, has made everyone want to rush to a new system. Well, a new system with a bunch of players that may not have or inspire the confidence that they would like. You use distributed ledger technology and gold to be that that object of immutability, of veracity. So I do think that gold will have a central role, whether it be with a Western-based IMF special drawing rights currency or the BRICS new settlement currency that I don't think is going to be announced next week. A lot of people do. I think they will wait. But I do think indeed it will be at some point when they announce it, it will have a gold pegging to it. And when you look at the central banks voraciously accumulating it, repatriating it, and just how horrible a fiat system is, where in 4 years, the last 4 years, this country has printed more money than in the history before it, where we can just print and print and print and destroy the value of the dollar. Those days are coming to an end. And I don't think people will ever want to jump back into a new fiat system unless there is some form of veracity or immutability or pegging that maintains its value. And I think indeed gold will have a central role in what comes next.
I appreciate that answer. It sounds like the question is more, when and not if, just a matter of time that it will play out. But something that surprised me, and I kind of want to shift to something different here. When I was looking up, how many, investors are really interested right now in holding gold, and when I was doing some research, curious to get your opinion, but it was saying that millennials are actually preferring right now to hold on to gold more than boomers and Gen Xers. So I'm curious to ask you, do you know if this is true, and why is this?
Well, I think there is some, I was wrong in the way that I looked at that group, and they impressed me a lot. Starting with Silver Squeeze, they are informed, they are industrious, and they have created a renaissance, mostly in silver, using social media, Reddit and YouTube and Twitter. They understand fiat currency. They understand the reasons to buy cryptocurrency because of what it talks about in relation to a currency system, a fiat system that is dying. They are more well informed than most of the people much older than they are. I think the one mistake, if any, that they make, if I had to paint with a broad brush, is what I said at the onset. A lot of the Gen Xers want to make a quick profit. They watch the massive gains in crypto and how fast it happened. They start, investing in things, around 2020, and equities went through the roof, cryptos went through the roof, real estate went through the roof, and there's this get rich quick mentality that I think is pervasive throughout the world right now, or at least in the United States. Doesn't matter how old you are, but more so in that group where I think a lot of people bought silver on the heels of the Silver Squeeze, GameStop and AMC. Let's squeeze the market, let's make a ton of money, silver will go way up. That would be the only thing that I would say they need to reflect upon, in that, to me, you make money in other investments, you put your profits in gold and silver, which is wealth. And but to your point, without finding fault in my own opinion, the way that some of them look at it, I would say that, yeah, they do understand it more so than I would have ever anticipated. And, as 10 years ago, as a lot of my older clients, when I started doing this as a 20-year-old guy, I was talking to people, I was talking to some, a lot of people that were in World War II. I was talking to people who were on the ship right next to the Arizona when it was bombed by Pearl Harbor. I mean, you're talking guys that, if they were still alive now, would be near 90 years old. And as these people and my clients started to die off and retire and kind of give up on investing, I was wondering who would step in to fill the void. And I didn't know, I didn't have confidence really that this younger generation would understand what gold and silver are. And to your point, I wouldn't disagree with it. I think they have a better understanding than most people do because they're in tune right now. I would just caution, if any of them are listening, to look at this as wealth and not as an investment. To me, it's kind of like going to the blackjack table, and every hand you win, you take a chip and put it in your pocket. And when you leave the casino, no matter how you did, you're going to have a pocket full of chips. Every hand that you won, you put a chip in your pocket. To me, that's the way that you do it with gold and silver. You know, if you own crypto and you make a profit, sell some, put it into gold and put it in your pocket. And, you know, if you're on a monthly acquisition, you buy it, you put it in your pocket, it goes away. It's something, you know, I still feel like I'm 19 years old. I'm going to be 53 next week. My brain feels like it's 19. Life is like a roll of toilet paper. You know, you're young, the toilet paper is brand new, you don't notice it's spinning. And as you get older, you start to notice the roll spinning faster and the cardboard getting closer. And you wake up and you're like, well, where the hell did all that time go? So getting on a pattern of paying yourself first, a habit, is the greatest gift my father ever gave me. The greatest gift anyone ever gave me was learning how to understand how to get out of the rat race. You pay yourself first, always. Find an asset class that works well for that. And to me, gold and silver are the best asset. I mean, gold has outperformed almost everything since 2000. No one would know that because it's the tortoise, not the hare. There is no get rich quick. But if you methodically put away gold and silver and use that as your savings, as your insurance, as your wealth, I think indeed it is a good way to go about it. That would be the only piece of advice I would give to a group of people who seem to understand things better than most.
I appreciate that piece of advice. I'm sure my listeners will too. I said to you earlier on, you know, like the majority of my audience is millennials. Something that I want to flip the script on is, you know, it's always important to challenge our blind spots and personal biases, right? And we talked about doing homework before. And for fun here, you know, I want to ask you a question. You know, that said, what could go wrong with your thesis on gold as well as silver?
I mean, I don't know. Look, it's like I said, it's lived through everything the world has ever thrown at it, and it has been agreed upon as being wealth forever, biblical times forward. I guess, you know, maybe they start mining asteroids or mining in the ocean and they find huge amounts of gold and silver. Maybe the world just no longer finds the utility for gold. I mean, silver has a myriad of industrial applications. In fact, there's 500 ounces in the tip of every Tomahawk cruise missile, almost exactly. You Google that, you'll see that. All of the artillery and missiles that we've given away to the Ukraine, well, we need to replenish that. Green and digital applications, a country that has told Saudi Arabia, hey, we're going green. We signed an executive order to be 50% green by 2030 and like 80% by 2050. We're going to need lots of silver to make batteries and solar panels. So I think the industrial component of silver adds an interesting, almost strategic element, adds an interesting component to that question. You know, I try to poke holes in everything that I talk about. When you are talking to millions of people online, you better at least have thought it out. And, you know, all I can simply tell you is that through all of time, gold has been acknowledged as wealth and as money. So unless that suddenly changes, unless they finally find, you know, millions and millions and millions and millions of ounces somewhere, or I mean, I don't see anything. In fact, I think the more things change, the more they stay the same, and things often come full circle. They may not, you know, they may not exactly happen the way that you draw out, but I think that history will rhyme this time. And I think that gold has been and will continue to be the bedrock of financial stability. I mean, every central bank on the planet owns it. And going back to, the Bible, pharaohs, kings, queens, emperors, they've all owned it as a form of immutable wealth. And the most powerful, wealthy governments and people on the planet continue to still own it. So what could go wrong? Government decree. Government says you can't own it anymore, like Roosevelt did right behind me there in 1933. Could that happen? Yeah, desperate governments do desperate things. I think it would be game over in the United States if that happened. I think instead they could easily take the ETFs like GLD and SLV and all the other ETFs that, are ironically, SLV is administered by JP Morgan, the biggest crook on the planet, who paid a $920 million fine for suppressing the metals market 2 years ago. Their head trader, Michael Nowak, is in prison. HSBC Bank maybe paid more fines than any commercial bank. They run GLD. So government could take those two funds, be sitting on the largest stockpile of silver in the world and the fourth or fifth largest of gold, and say, hey, we didn't do anything to break any laws or infringe any civil liberties. You can still own it in this country. I think, those are things that could happen. Short of confiscation by a government who is out of options, I personally don't see a lot that can ultimately derail it, especially if you are looking at it as wealth and not as an investment. Over time, I think it will do what it has always done, and that is to preserve purchasing power. I mean, using that coin behind me. So this is a $20 gold coin, and this is a $20 gold certificate. The difference between this, which is dated 1906, the difference is, instead of it saying "In God We Trust," it says "In gold coin payable to the bearer on demand." So let's say your grandfather, your great-grandfather in 1906 left you two buckets, two boxes with "This is for my great-grandson." And in it, you had $10,000 or 500 of those $20 bills and 500 of those $20 gold coins, which is almost exactly an ounce. Well, $10,000 here, 100 years later, 100 plus years later, almost 120 years later, 10,000 bucks. It's nice, but it's not massive. But the same 500 $20 gold pieces is $1 million. So when you talk about gold retaining its purchasing power, that's exactly what it does. It isn't there to make you wealthy. It's there to retain its purchasing power, and it has for hundreds and hundreds and hundreds of years. I'll give you another example. Let's say in 1960, you decided, your parents, they were gifted, let's say, let me do the math here real quick. I think it's just a second. You'll see where I'm going with this. 16. Okay, so in 17,000 divided by, in 1960, the average price of gold was $39 an ounce. And an average house, according to the US Census Bureau, was $17,000. The average house today, I don't know, well, let's just Google it real quick. Average price of house 2023. The average price of a house is $410,000. Okay, so your parents were gifted 435 ounces of gold from your grandfather. And your parents say, well, what should we do? Should we buy this house together and use the gold that we were gifted, or should we take out a mortgage for $17,000? Back then, if you made $10,000 a year, you were successful. But let's just say, for example, that they decided to take those 435 ounces of gold and shove them in the attic, earning nothing but dust, literally, for the last 60 years, and took out a mortgage for $17,000. Here we are 60 years later, and that $17,000 they paid for the house, which was equivalent to 435 ounces of gold. What would it buy you? A couch and a TV, and maybe a sectional and a table. I mean, you get some stuff for it. But the 435 ounces of gold that it was equivalent to, that never earned a drop of interest over 60 years, is now worth $900,000, and it will buy you over two houses. So not only did it retain its purchasing power, it actually added to it. So whether you go back 60 years or go back 120 years, the result is the same thing. Gold is there to retain purchasing power, and it does so methodically. So it's not about getting wealthy, but history has shown, you go all the way back to Roman times and look at what their pay was equal to in silver, and look at what it would be worth today. And it's virtually the same thing. So I don't think there's much that will derail it unless there is a massive shift in human mentality. And I really don't see that happening. So good question, fair question, trying to think on my feet, but I don't see it really being something in our lifetimes that we will see go by the wayside as a archaic, barbaric relic of the past.
I appreciate that well-backed answer there, Andy. And something that I want to shift to, we've talked a lot about, the big picture, for investing in gold and silver. But something that I'm huge on that I've shared with you is also the mindset of investing, right? Like behavior economics and understanding that. And the biggest thing that I've been reading about in the last couple of years that have helped me with my decision making is understanding mental models, right? And Charlie Munger as well as Warren Buffett have written about a lot of them. And so a question I have for you is, what are some mental models, from your toolkit that you apply to help you make more intelligent investment decisions?
Well, I mean, if I understand the question, right, because I'm not really familiar with the term, I mean, I would think it has something to do with psychology. Wave theory, as an example, Kondratiev wave or Elliott wave, which would be about human emotion. And I think it's very important to try and take emotion out of your decisions, to be regimented. For me, my regiment was purchasing every 2 weeks, regardless of what the price was doing, to get on a plan and stick to it. My sixth grade teacher always said you have to have stick-to-itiveness in order to succeed. And you get on a plan and you stick to it and become regimented. But I think the whole theory of Elliott wave and Kondratiev wave is markets are moved by human emotion, FOMO as an example. And I think that can lead to pitfalls in investing. So I guess the one thing that I would say to people is cost averaging, which if you stick to it on a regimented plan, smooths out the uncertainty curve, keeps you on a pathway that will allow for variations in the market. And some will be good and some will not be good, but over time, you hope that things smooth out. I mean, you can look at a graph and look at it over 10 years and it seems relatively smooth, and zoom into a hour by hour graph of the same chart and you see great swings. So I think that over time, being regimented, trying to remove emotion from the equation by sticking to a plan, paying yourself first, those are the kinds of things that have done well for me. And every time I've ever been emotional, thinking, oh my gosh, I'm going to miss out, I got to jump on this, it usually turns out poorly. So to me, it would be regiment and a plan and cost averaging. Put it all together, I think you have a recipe for success over a long period of time.
Those are some really good mental models that you just shared. Appreciate that. You were spot on, Ashley, with the question that I was asking. And something that I want to shift to you from there, you've worked with a lot of high profile investors, right? So question I have for you is, what do you believe separates a good investor from a great investor?
Luck, timing, money. There is truth to the saying you have to have money to make money most of the time. In terms of luck, I was 22 or 3 years old. I had a client named John Tomchek. God rest John's soul. He's no longer with us. He was a very successful geologist. He said to me, Andy, how much money do you got? I said, John, I've only been doing this for a few years. I have $9,000 in an IRA. He says, put it all into Western Copper. Trust me. Put it all in. Trust me. I said, all right, John, I don't know where else to put it. And I did, and it was like 8 cents a share. And within a few short years or less, it was bought by a company called Glamis for like $7 a share, somewhere in that neighborhood. And Glamis was then bought by Goldcorp for north of 30 at some point. My memory is somewhat fuzzy, but I turned 9,000 into over $650,000 out of luck, being at the right place at the right time, relationships, studying and doing your homework. There's a lot of luck in life, but luck is when opportunity meets preparation. And if some people will walk right by that because they're not prepared and they don't even see it. So preparation, homework, luck, timing, associating with people in that the right people, being in the right crowd, doing all you can to better yourself, all of those things matter. In the end, I think there's a lot of luck. But again, if you're not prepared, you won't realize that it's an opportunity. So I'm not saying I was overly prepared as a very young man in this industry to take John Tomczyk's word, but I understood it enough to figure, okay, it's a calculated speculation. But I do think that, being at the right place at the right time also means doing your best to hang in the right crowds, to ask questions, to learn from people who have been at this or at whatever it is this is for you longer than you, and do all you can to get noticed by the people that have been serially successful. I know that's a lot of answers, but I mean, to me, I see parts of my career in all of those answers where you associate with the right people, you do your due diligence, you're prepared for when there is an opportunity that many would consider to be luck, that you're ready to capture it, and hanging in the right circles is a big thing. So you can learn a lot from people that have been successful before you, and it's been my experience that more often than not, they're willing to share their wisdom with you. You have to ask, and I find along the way there have been great mentors in this industry for me that I am very thankful for. Rick Rule and David Morgan and Jim Sinclair and Richard Russell, and lots of names that I am so thankful for the help they've given me along the way. But if I wasn't in the right place or in the right mindset to take advantage of their experience, then it would have gone by the wayside. So I know this is very all over the place, but if you're able to dissect that for what I just said, to me, it's been really very, very much a recipe for my success. And I wouldn't do it any differently. Really associating with good people is the first step. And from there, you hope that what you learn from those people gives you inspiration to learn more, to ask more questions, and to broaden your scope and your group of people who understand or are trying to do the same things you are. And I don't know if I answered that well, but I can tell you that it makes sense to me.
I think it's a great answer. I think, it's a lot more than one thing, but I think the first step, which you brought, is, having a strong circle of competence. So people that you associate, staying humble, learning, catching your blind spots, constantly trying to grow with that circle of competence. So I really appreciate that answer. That was like the main theme I got out, even though there's obviously secondary things that are part of that success of becoming a great investor. And something that I want to shift to is based off, becoming great. A question that I ask a lot of my guests on the show is, what is your definition of greatness? Because, the purpose of my show is to really inspire millions of people, to achieve greatness, but also enhance their overall personal well-being.
Finding balance. I mean, if you're lucky enough to love what you do, I love what I do. My biggest challenge in life is finding balance between family, relationships, things I like to do, and running a company and doing all of the things that that are required to be successful in what you are doing. But focusing too much in one area can lead to pitfalls in other areas. And I'm married. I got 3 kids. I've given up a lot over the last several years. to get to this point. And I would tell you that my biggest challenge is finding balance. And in the few moments of my life where I find balance, everything is great. When I worked hard and then spent time with my family and got to go golfing with my buddies and everything just worked out, finding that balance is what makes me the most happy. You can kill it in business and blow up your family and you're not happy. You can ignore your business and spend all sorts of time with your family and you're not happy. It's finding balance in whatever it is that you do. And that's the most important thing, having a broad outlook that life is multifaceted, and what makes it go around are relationships. So if your relationships at home are screwed up, you're not going to do well at business, and vice versa. So I guess I would say, to me, it's finding balance. And when I find that equilibrium where I can go to bed at night and my head stops spinning and I'm not staring at the walls thinking at 2:30 in the morning, wishing I could fall asleep, I'm not in balance there. And it's a tough thing. I don't know an easy way to get into balance other than to constantly strive for it. In other words, if working out is important to you, make time to get up at 6:30 in the morning instead of sleeping till 8 and go to the gym. If working really hard is important to you, do it, but set aside a time to stop working and to be with your family, to be present. These are things that are very important. Take some time off. I mean, I'm the guy that I've hardly taken a vacation in 30 years. I've traveled all around the world with my family too. But my wife has a collage up in her office of me with the phone to my ear, whether it be on the Bahnhofstrasse in Zurich, in the rainforest in Panama, on a beach in Jamaica, skiing in Colorado on a chairlift, wherever I am. I struggle with finding balance. And when I have those brief moments of finding balance, everything is good. And if not, it's slightly out of balance, off kilter. And to me, that would be my definition of greatness: covering all my bases without ignoring what is also important, maybe not right in front of me.
I appreciate that answer there, Andy, because I think having your wellness wheel balance is super crucial. You could be kind of like you said, financially well, but maybe not socially well, or maybe not, emotionally well, right? So they're all interconnected, right?
Or healthy. I mean, I had a kidney stone a month ago. It was the worst 2 weeks of my life, the worst experience I've ever had physically. 2 surgeries, and I'm healthy, and the doctor said, "You're amazingly healthy. You need to drink more water." So I'm constantly drinking water, but you take for granted your health, and I realize that. So all of the little things, all of these things that we know are easy to forget. So there is no one answer for greatness, but it is to try and find a balance between yourself spiritually and physically and mentally, and also your obligations to everyone around you, including your business. So to me, that would be my own personal form of greatness, is that I can do all I want to do in business and at the same time still know at the end of the day that I'm a good dad and a good husband and a good friend. And if you can pull that off while still wanting to get up the next morning to go do what you're doing, I would consider yourself very lucky and very close to greatness.
Totally. Andy, a question that I want to ask you based off of that is, that now that you have a feel of my show and what it's all about, who is a future guest, someone that personally that you would want to see on this show?
Oh, that's a curveball. I think Chris Marcus from Arcadia Economics is someone that I've learned a lot from. He's younger than I am, but he in many ways is very brilliant. And he, I think, struggles with balance too. I think he would be someone to learn from. Who else? Robert Kiyosaki, good friend of mine. He's achieved greatness. His book, Rich Dad, Poor Dad, was written 25 years ago. It's the most successful #1 all-time selling personal finance book. And when I spoke at his conference about 3 months ago, his staff put up on the screen, I don't know what it is today, it's got to be close, but not only is it the all-time best-selling book, #1, personal finance, but when I was there 3 months ago in Arizona speaking, it was #2 on the current Amazon best-selling list, current. So he's achieved greatness in a way that he wrote a book that is timeless, and he's self-made. He was a Marine. He is patriotic. He's just a fantastic guy. He's someone that I think everyone could learn a lot from. Maybe he's probably the best answer because I've learned so much from him in a year. We've become good friends, and he's filled with amazing information and insight, and has proven that, you know, someone, he says he's a bad writer. He flunked out of school, yet he wrote the best-selling personal finance book of all time. He found balance somehow. So that probably would be my #1 recommendation for you, Robert Kiyosaki. And if you need me to make an introduction, I'm happy to do it.
Awesome. Great. Yeah. Well, I appreciate both of those recommendations. And I just want to add one additional comment there on Robert Kiyosaki. You know, I met him this past year at Jay Martin's conference in Vancouver. And what I admired most about him was his humbleness as a person. And yeah, there was a couple of times throughout the conference where, you know, he came over, and here I am, just a young buck millennial, and he came over and said, "Hello, how are you doing?" And we had small chat. And you know, that says a lot about someone, you know.
Well, remember what I was saying earlier about asking questions? You know, he knows that intuitively. He can learn from anyone. Here he is, much older than you, 70 years old or so, and he's learning from you. That's one of the things that I was saying. You know, I went up to David Morgan at a conference and struck up a friendship many years ago.
Yeah.
If I never did that, it never would have happened. I called Rick Rule and said, "Let me come out. Can I make a presentation to your office?" 25 years ago. Worked with him ever since. Associate with good people, ask questions, be prepared when the opportunity arises. Don't go up and ask them that if you're not ready to answer some questions right there on the spot. But these are the things that have worked for me. And obviously, just by the way he came up to you, I can tell he gets it. He's one of the few people I've met in all of the years in finance who truly get it. And those are the ways to it, because in the end, it's not about how much you know and how hard you work at school. It's about relationships, and not drooling on yourself when you get an opportunity to speak with someone who can help you, and whom you can learn from. So that's what I mean about preparation meeting opportunity. Well, some call it luck, others call it not. And that's a prime example. So he comes up to you and you're prepared to engage him. That's where luck and opportunity, I think, diverge. No, it wasn't luck. It was that Ben was in a position to take advantage of what was an opportunity. Some may say you were lucky. Maybe that's just the stars lining up where he decided to come talk to you, and you were ready to have that conversation. These are the kinds of things, and maybe I make them sound too simplistic, but really, if you put yourself in a position to have these types of relationships, then be ready when the time comes. And look, you didn't have to go much further than emailing me and asking me to come on your show. I did. And who knows what comes of that, and the people I introduce you to. And when that happens, I'm sure you'll be prepared. Some may say that's luck. I wouldn't. I would say you took advantage of an opportunity that you were prepared for. These are the kind of things that will allow you in your own mind, whatever your definition of greatness is, to get there. And relationships are what it's all about. So treat everyone with respect, because you never know, someone you meet tomorrow may end up being someone you need something from 5 years from now. That happens too. So be kind, treat people with respect, and be prepared when you get that opportunity.
I appreciate those words. And yeah, I want to kind of, you know, just be mindful here. And I want to go with, you know, where's the best place, you know, for my listeners to, you know, follow your work, you know, support your work, or even connect with you if they need to reach out? Where's the best place, Andy?
Well, of course, milesfranklin.com. We had a YouTube channel for a long time. The videos are still up there, and The guy that ran my YouTube channel is Elijah Johnson, Dunnigan Kaiser's son, who they both became representatives of my company. And so we kind of let the YouTube channel go feral for a while, but we plan on re-engaging that very soon. I've done over 1,200 YouTubes in the last 4 years on shows just like yours. And if you Google my name, there's over 10,000 videos out there. A lot of companies will take my videos, splice them up and make them their own. I guess they try to monetize it. I don't care. I find it flattering. So there's lots of my videos out there, the way that I look at the world. And I've been talking about bricks for 4 years before anyone was, and now everyone is. And so go back and watch some of the stuff that I did in 2019, 2020. That's where preparation met opportunity. It wasn't luck. And if they have questions, send it to info@Miles Franklin. And you can say Ben sent me, or ask questions directly for me. It will be passed to me. I will respond to them with my own personal information. Once I reply back to you, you're free to email me or call me at will. And I'm pretty good about getting back to people who send me direct emails. So info@Miles Franklin with any questions. We can also provide a price list for you that is, it's a much more competitive price list, not on our website. It would be for larger orders over $10,000. You'll find prices that are better than what's on our website. Or any questions, no obligation to make a purchase. I'm happy to answer as many questions as I get. We have 12 brokers. Every one of them goes back, just about every one of them goes back to childhood with me. They're my oldest friends. We are a very tightly knit, family-oriented company. And whether it be me or one of my oldest, best buddies that you're talking to that I personally trained, you will be treated with respect, with kindness. We'll answer your questions. Knowledgeable people answering your questions on anything from geopolitical events to economic events. Several of my brokers used to work on Wall Street. Smart guys and gals. So that would be the best way to do it. And I'm always happy to hear from new people. So please feel free.
That's great, Andy. So I'll be sure on my end, to put that in the podcast notes. That way it's super simple for people to, find your work and watch your work and support your work. And I want to take this last little bit of time, to really thank you for your time, like your generosity, your kindness, and most importantly as well, just being a great human being and sharing valuable insights.
Appreciate that, brother. I try hard. And, a lot of people, the only thing that bothers me is when people say, oh, he's just talking his book. And I just want people to understand that it is possible to combine capitalistic ideas with good intentions and honesty and integrity. They don't have to be mutually exclusive. I started this business with nothing. We came from nothing. Borrowed money from a friend and sold life insurance policies to fund a startup business in a one-room office the size of a closet. I understand what it means to achieve the American dream. I mean, I'm a patriot. I thank God every day that this country gave me the opportunities that it did. I'm saddened to see what's happening to this country, but just understand that I'm someone who would have been very unlikely to succeed. I was an average student and a good athlete, and I parlayed that into some opportunities and took advantage of them, worked hard, never got a complaint ever. And I love what I do, and I love trying to help people, and I don't need to do these videos. We've done 9 billion in sales. I don't need to put myself out there the way that I do. And I just want people to understand, those that are trying to chase their dreams, that capitalism and doing the right thing and having proper intentions are not mutually exclusive. You can achieve both. And so thanks for the opportunity. I mean, I haven't had an interview like this ever where I spoke candidly along these lines. So I don't know how I'm coming across. I'm trying to be as authentic as possible and think on my feet, think about the things that allowed me to get to where I am. And it's been very rewarding. And even thinking about them makes me feel good, because no one ever gave me anything but an opportunity, including my father. And the best gift he gave me was, teaching me how to save and pay myself first. So you can do it. You can reach your dreams. I've been doing this for over 3 decades. It didn't come overnight, and there were a lot of struggles and difficulties, but have strong fingertips. Hold tight to your beliefs and be there to see things out. And sometimes just being there, good things can happen. So I'll stop rambling. I kind of like having these therapeutic conversations. They're somewhat cathartic and make me, think in terms of retrospectively. But for what it's worth, I really enjoyed this. Would love to come back again sometime soon. And if you ever need anything personally, or for any of your listeners, please reach out. We would love to connect and see what we can do to pick up where we left off.
Well, thanks for that humble answer there, Andy. And I just want to also say too, I've really enjoyed having you on, as well as showcasing, more of Andy, on this episode. So thanks again for everything.
You got it, brother. All the best to you, man. Hope to talk to you soon.
Likewise.